Apple reported its Q1 2014 earnings last night after the close, and the results were not too bad, but the stock really tumbled in response. And in this quick presentation, I'm just going to cover the numbers they actually reported in the call and the real reason the stock market responded so poorly to the call. Okay, so Apple sold 51 million iPhones, which is, up 6.5% or so over the same quarter for last year. It's not a bad increase at all. And iPad sales were up significantly, up to 13.5% increase, selling over 3 million more iPods than they have in the same quarter last year. And because of this, they were able to do 57.6 billion in revenue, which is a 5.7 increase over last year. And part of the reason that revenue didn't quite increase as much as you might think looking at the iPhone and iPad sales is because iPod sales dropped off a bit. So the end result is going to be 13.1 billion in profit, which is actually unchanged from Q1 2013. And earnings per share were up 2%, but this was just due to the stock buyback, not profit increases. So there's really two reasons why the market disliked this report. One were that expectations for this report were very high. Analysts thought that Apple was going to hit around the high end of its guidance or even blow it away altogether. And Apple landed around the high end of its guidance, but people already thought that was going to be the case. Anything but that hitting that high end was seen as a disappointment. And what was even more disappointing for investors was that analysts were predicting 56 million iPhone sales and Apple only sold 51. And I think that they were just projecting those numbers based off Apple's announcement of, record sales, which they did hit record sales. They just didn't hit them to the extent that they thought they would. And another problem is that there was no profit growth. And sorry for that spelling error down turning, but there's no profit growth. Revenue grew 5%, but there was declining margins, so Apple didn't actually convert this increased revenue into a profit. And that's a concern because, stocks trade on revenue growth, and if there's no revenue growth at all, it's going to, hurt the stock price, particularly because investors or analysts were betting that Apple would grow. It was priced to grow already. And in the event of, nothing, not meeting projections this quarter, or meeting projections but not meeting analysts' expectations, the only way the stock could move up from here or not do poorly would be to issue good guidance. And Apple or Tim Cook basically said don't expect much for next quarter on the call. And as a result, the stock is down. And my take is that this report was pretty similar to what was expected. There was, really good iPad sales, which, we had predicted on the blog. iPhone sales were pretty good. I can't complain about that. And they continue to make a lot of money. Apple made 3% of its market cap in profit this quarter. And that's a lot. Oh, that's a lot of money to profit. So I'm still long Apple, The reasons I still like Apple are intact. I think they make the best product. I think they make a lot of money. I think that their cash reserve and their buyback program will make the company more valuable over time, even if they never produce any product line. As long as they keep producing the best tablet and the best phone and keep increasing sales of those two devices, I think that the stock's perfectly healthy, and I think it's got a lot of potential to move up. So if you're thinking about getting in, I think this is actually a good time to buy, because whenever the stock takes a big drop like this, it's a nice time to get in at a lower price. So definitely think that, this is great for people that are looking to get into the stock. As a long investor, I'm still happy with this report. I wish the street would value them a little bit more appropriately for what they do, but, I'm a long investor. I'm not worried about, each quarterly report. I'm worried about the long-term trends. And I think that Apple's still in a good place.